Welcome back. So let's continue digesting yesterday's budget. Finance Minister Enoch Godongwana announcing a VAT increase of 1 percentage point over 2 years. The decision effectively halves the originally proposed measure, which has now been abandoned, of course, due to insufficient political support. A hike of 0.5 percentage point will take effect on the 1st of next month, followed by another half in the next financial cycle. Let's make sense of all of this. Bring in Sanlam Investment economist Patrick Buthelezi, who joins us now via our videolink. Patrick, lovely to have you on the program. Thanks very much indeed for making time. It's always interesting to hear, of course, as people make sense, generally speaking, of this budget. Part of the things I've heard is that this is not a pro-growth and pro-jobs budget. I'm not sure if you agree with that, but depending where you stand, I wonder what you use to effectively make that call.
No, I think for me, I think forming a budget in this environment, given the constraint, I think the budget still tries to balance and protect sustainability, because I think where we find ourselves in a situation where we accumulated a lot of debt from 2010 up to recently. The level of debt now is over 6 trillion. So because of that, we're paying a lot of interest. So by paying a lot of interest, interest is absorbing a lot of resources. And at the same time, the economy hasn't been growing. Post-global financial crisis, the economy grew just under 2%. So that is the biggest problem. So it is very difficult to craft the budget in that environment. And okay, so hiking taxes is not something that is nice for any household or for any individual, but given difficult circumstances, I think the Treasury finds itself having to make these difficult decisions. But when you look at the expenditure mix, so now when you're thinking about long-term and economic growth, I think the National Treasury is allocating quite a significant amount to a fixed investment, and that is something that will lift potential growth over time. Unfortunately, in the near term, let's say in the next 3 years, the economy is still expected to grow at a slower pace, around 1.8%, so which is not enough to generate the jobs that we need in this economy, given the high level of unemployment rate.
And I suppose, given what you've just said, I wonder to what extent you agree with those who are suggesting that this was yet another missed opportunity at announcing those structural reforms we've been speaking about for years to finally get us that meaningful growth.
No, I think if you're looking at the allocation for infrastructure, I think it's trying to fund those reforms. So there is support for ESCOM there, and government is also trying to crowd in the private sector, which is something that we need, because the government by itself cannot solve the problems of South Africa. So we need the collaboration between the government and the private sector. So I think we find ourselves in a very difficult situation. So I think under these constraints, I think it was still a fairly decent budget. But what you would want to see more, you would want to see more expenditure cuts. Because, I mean, if you cut expenditure, at least the pressure to raise revenue through hiking taxes, I think that pressure will ease.
Yeah. I think another point that could ease pressure is, of course, making sure there's more foreign direct investment and not necessarily aid, which has been a big talking point since Donald Trump assumed office. How do we get that right in the context of the challenges you've outlined? I mean, is South Africa, after this budget, more investor-friendly, do you reckon?
Yeah, I think in South Africa, if you study history from the early 2000s, I think if we look back, we were able to attract a lot of investment. And if you think in terms of what we did back then, So we raised investment as a percentage of GDP. So investment increased up to just over 20% of GDP. And at that time, the economy was growing very fast because we were investing, and because the environment was very conducive also for foreign investors. We saw a lot of FDIs coming through. We saw investors from other countries buying companies in South Africa. But if you look post-global financial crisis, because of infrastructure that has been failing, whether it's energy or rail. So we haven't been able to attract as much investment as it was the case before. So trying to fix investment, we are laying the foundation for attracting investment. Also, I mean, what you're mentioning globally, there are pressures. I mean, you can see that there are shifts taking place globally following the elections last year. I mean, there were a lot of changes around the world, but focusing on fixing infrastructure, because that is what we can do, creating the environment that will enable us to attract foreign direct investment over time.
Patrick Buthelezi, thanks for giving us your insights. We appreciate the time. Patrick is an economist with Sanlam. Once again, thanks very much indeed.